All right, so we're live. We're live. Welcome back to my channel. Um, all right, in today's free beginner class, we'll be sharing a lot. Please do where to join and make do where to take notes. Take notes of what we're going to share. It's going to be powerful. 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 I tell you the truth. All right. So welcome back. If you're joining us for the first time, please like, share, comment, drop your thoughts. All right. And yeah, so tonight we'll be talking about liquidity. First of all, before we go into other things that we'll talk about, we'll first talk about liquidity. So what's liquidity in the market? Liquidity is one of the main drivers of the market, all right? So you have to understand that liquidity is one of the main drivers of the market. Liquidity is what moves the market, all right? The market moves because of liquidity. What's liquidity in a layman's term is simply money. The money is in the market. Yeah, region where money is, right? So let's go. If you're here, please join us. Let's um let's take this another level. So liquidity is divided into two. We have the external range liquidity, and we have the internal range liquidity. We have the external range. Hope you're taking notes. The external range liquidity. We have the external range liquidity and we have the internal range liquidity. All right. So tonight is going to be fire. Tonight is going to be fire. It's going to be like a lot is going to be shared tonight. So like I said, they are the main drivers of the market. Institutions um trades into liquidity levels. All right, be it external range liquidity or internal range liquidity. Be it external range liquidity or internal range liquidity. So one of the first external range liquidity is the old eyes. When I mean old eyes, um, in a trending market, an uptrend market at an uptrend, I want to say old eyes. For example, market is on an uptrend. These eyes, these are the external range liquidity where market will trade into, right? Market to trade into. So when you know these regions, you know that market will definitely trade into because these are the external range liquidity, all right. And we also have old lows. We have old lows. We have old lows also, all right. Old highs, old lows, and we also have equal highs. Equal highs. For example, a market like this. Let me take this out. All right, so we have when the market is moving up, and forms equal highs. So that region is a region of liquidity. So we have equal highs. You know that market will definitely trade into that region, and because we are smart money traders or ICT traders, we don't see this as a double top. We see it as liquidity. So we have equal highs, equal lows. For equal lows, for example, the market is on a downtrend. All right, and it forms an equal low in that region. Know that whenever price will definitely come and trade into that equal low because it's a region of liquidity. When I mean region of liquidity, there's money here. There are a lot of stop losses here because of this equal lows. Retail traders bought from this one, so institutions will come and trade into those levels of equal lows and equal highs. All right. Also, relatively equal highs. When I mean relatively equal highs, it's not really clear, but we have you have something that's like equal, relatively equal highs, something like this. It's not really equal, but they are relatively equal. So regions like this market will trade into that region because they are like relatively equal. It's not really clear, but those are regions of liquidity. Also relatively equal lows, relatively equal lows. For example, this market will trade into that region because this is the region of liquidity. This is the region of liquidity. I hope you are getting me. If you're getting me, please say yes. You can. You are getting it. I want to be sure that you guys are following. I want to be sure that you guys are following. I want to be sure that you guys are following. All right. All right. All right. All right. Okay. Yeah. Thank you so much for joining. I can see you guys. I can see you guys. I can see you guys. Thank you. Thank you. Thank you. Good, good. So for external rate liquidity, I said we have the equal highs, old lows, equal lows, relatively equal highs, relatively equal lows. All right. So let's go to the chart and let me show you something. All right. So let's go to let's see. Okay. So looking at this market, the market is in an uptrend from here. I just want to look from here. So from here, right? Market formed broke structure, right? Forming a new high, right? So like we said this is the break of structure to the upside, right? That's the break of structure to the upside. This was the break of structure to the downside, but market was failed to continue in the downward move and broke up, and now giving us a breaker block, forming a breaker block. But they came to use this other block, right? All right. But what are we going to? Where is now our external range liquidity? Let's say we have not seen this part of the market. We just saw this. Now we know that since the market changed, um, gave us a change of character to the upside. I hope you guys are getting me. I hope you guys are getting me. Okay, you're just joining. Welcome, 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 welcome. All right. Um. So as I was saying, I said I was talking about liquidity. I said liquidity. This is what where the institution trade into, right? Institution trade into these levels because they are regions of where money resides in the market, all right? Like a retail trader now, they trade most of their stop losses are below the lows of, or below equal lows, below equal highs, or below old highs, or above old highs or below old highs, depending on whether they are selling or buying. So I'm saying liquidity is basically money in the market, where stop losses. So they trade. You see, market makers trading into those regions because that's where money resides in the market. I don't know if you get that. So we have the external range liquidity, we have the internal range liquidity, and we have the external range liquidity and the internal range liquidity. The external range liquidity is now divided into the old eyes, equal eyes, relatively equal eyes, right? Relatively equal eyes, right? Relatively equal eyes, relatively equal lows, old lows, and all that. So as I was showing, I showed how what old lows are. Your higher low, higher lows. Those higher highs, higher lows, they are basically liquidity levels, right? These are the external range liquidities. old highs, old lows, equal highs, equal lows, double top, double bottom. These are liquidities. Market makers will trade, institutions will trade into those regions, all right? So these are external range liquidity, right? So as I was saying, I said, so when you look at this market now, where is the new range? The new range is where is that you are not seeing what's currently happening, but this is the new range, the old low to the new high, right? That's your new range, right? So you'll be expecting that the market, since the market is has changed trend, you'll be expecting that the market will move up, right? To take out old highs, right? After forming a new low, it will come and take out the old high, right? So this is now your new your area of liquidity, old highs. So definitely the market will come and trade into it. You see how market traded into it, right? See how market traded into it, right? Same thing for this high. These are regions of liquidity, both your old highs and old lows. Your highs, your lows, this low, that low, that low. These are liquidities. These are regions of liquidity, right? Right? These are liquidities. I don't know if you are getting. Please, just tell me you are getting it so that we'll know that you are getting. You are following, right? Um, please, are we getting it? 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 I want to be sure that you guys are understanding what I'm saying, right? I want to be sure. I want to be sure that you guys are getting what I'm saying, right? So that I will not just waste time. I want to be sure that you guys are getting it. I know it's not. It might not be clear at first, but you definitely get it. You understand it. You definitely. Okay, great, 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 great. Oh yeah, 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 yeah. Reynolds, I can see you. I can see you. I can see you. Welcome, welcome. Thank you for joining. All right. So I said old lows, old highs, equal lows, equal highs, relatively equal highs, relatively equal lows. These are what regions of liquidity in the market. Regions of liquidity in the market. Do we get that? Yeah, I trade synthetics. Yes, I trade synthetics. I trade synthetics, and yeah, 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 yeah. If you want to learn how to trade synthetics, to I trade synthetic, but now I'm using currency for this explanation. Also, I will still shift to synthetics. I trade synthetics majorly. Majorly, I trade synthetics. All right. So I said, what old eyes? Yeah, these are regions of liquidity. These, you see. All right. So these regions that I'm marking out, markets will come and trade into them. We don't know when market will come and trade into them, but definitely the market will come and trade into them. You see, this old eyes. You can see where this market is heading into currently. GBP USD is currently going into that region. I tell you the truth, it will take out that definitely. Um, all right. So I don't know if you got that. Also, you see these regions. These are old eyes, right? Old eyes. So these are regions of liquidities in the market. These are where markets will, or institutions, they will trade into. All right, these are where institutions will trade into. And let me show you guys on the 1 hour external range liquidity. The same thing will still be, it will still be the same on the 1 hour, because this the external range liquidity will still be the same. So you see how price will trade into those levels coming. So you can see old highs, old lows, old highs, old highs, old highs. You can see. So you can see. So these are regions of liquidities in the market. For example, you can see this our price traded into that old high, taking out this place, this impulsive move, taking out. You can see this one is even relatively equal, taking out. You can see it keeps on taking out the highs. So that's how the market works, all right. So these are um external range liquidity. External range liquidity. I hope you guys are getting it. External range liquidity. External range liquidity. All right. These are external range liquidity. All right. So let's go to internal range liquidity. For the internal range liquidity, we have one, the fair value gaps, mitigation block, breaker blocks, um, li- um, liquidity void. Take note of them. We have liquidity void, we have fair value gap, we have the other blocks. But in their order of importance, we have one first the mitigation block, right? After the mitigation block, then we have the breaker block. After the breaker block, then we have the liquidity void, the fair value gap, the other blocks, the rejection blocks, and the old highs and old lows. So these are institutional reference points, right? But for the internal range liquidity, we have fair value gaps, other blocks, breaker blocks, mitigation blocks. All right. So one of the most important one here is the breaker block and the mitigation block. That's why I said in their order of importance. In their order of importance, mitigation block is higher than breaker block. So institution uses most of the times uses the mitigation block to pick their orders. All right. So let me do something. Let me show you an example. All right. So going to your chart, when the market is forming series of higher high, higher lows, higher high, higher lows, higher high, higher lows, higher high, higher lows, then a sudden when the market refuses to take out this old high and now breaking structure to the down, right? Right? You get what I'm saying? There was a break of structure, right? There was a break of structure, and you were expecting that the market should continue taking out the highs, but there was a failure swing. There was a failure swing here. There was a failure swing here, right? And now l- failing, there's another block that failed. They're supposed to hold price, right? That held the price a little, but refused to break through this high, right? Now forming a failure swing. This block that will be left here is the mitigation block. The block that is supposed to move this price up is the mitigation block. All right. I'll not go too deep in them. All right. If you want to learn more about them, there are secrets in trading them and ways to trade them perfectly. All right, there are very much other confluences that you need to trade this mitigation block. You not just set your limits because way your TP will be very high or your stop loss will be very large, right? But you can also learn the way of learning how to trade, get confirmation entries and all that. But also there are confluences for trading this. You not just enter into them. But I just want to show you something. So when there's a failure swing, right, and the market takes out forming a change of character, right? Change of character, taking this old low, like I said, that's our liquidity level. Taking that old low, and now where is the market forming to into the mitigation block? This is the internal range liquidity. Then where is it trading into next? External range liquidity. Your old lows, your old lows, your old lows. You see what I'm saying? Your old lows, your old lows, your old lows. Uh, okay, I've been trading for like 3 years plus now. 3 years plus. Yeah. So let's go to the chart to so this for the sell scenario mitigation, bearish mitigation block, right? Okay, so I will just show you the for um the bullish mitigation block. Hope you guys are following. All right, so for a bullish mitigation, we will have series of lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Refuse to take out this old low. That's the significance of that's the difference between a mitigation block and a breaker block, right? A mitigation block refuse to that's failure swing, refuse to continue the trend, just give us a sharp um retracement to the upside, right? So where will price retracing to into internal range liquidity, which is where at the mitigation block, then price will continue up into external range liquidity, your old highs, right? Your old highs. So these are where you'll be targeting, but price will move from your mitigation block, your mitigation block, your mitigation block. All right, so let's look at one example or two of mitigation block, right? All right, so mm, all right, so there's a clear one here. So we saw that the market was forming series of lower low, sorry, lower low, lower high, lower low, lower high, lower low, lower high, lower low, then now lower high. But this is not a break or structure. This is not a break or structure. So I'll say the failure swing, the new low. Okay, let me just look for a clearer one. That one is not too clear. It will not give us what we want. Remember, this is your daily time frame. If you can catch it from a clear, right? All right, let's use this. Okay, so we saw that the market previously was forming higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? This is even a breaker block. This is a breaker block because there was a there was a break above. Then price came back into the breaker block and traded into external range liquidity. I'm looking So I said I want to show you guys mitigation block. Mitigation block. All right. So let me show you from. All right. All right. Let me. So this. Okay. This is a VX 100. All right. So uh, clearer one. I think I can see one here. So we saw this downward trend. All right. Then the market did not continue. Failure swing to the upside. Then what's happened? Retracement into the mitigation block. Then traded into external range liquidity. Where's the external range liquidity? Above orders. Can you see that? Above orders. So this was your failure swing. This was your failure swing, right? And where's the mitigation block? Is this green candle? Yeah, right there. And that's what they use to push price all the way up. All right. These things, that's the daily time frame. So all right, all right, all right, all right, all right, all right. So you just have to go to your chart and practice these things and see these things. See how it works. All right. Let me go to V75. I think there are some examples there that are more clearer. Failure swing. All right. I'm just trying to look for the perfect, the one that are clear, that are very clear. Sometimes you might not even retrace into the mitigation block. All right. All right. So let me go through breaker block so that as I'm just looking for. So for the breaker block, for the breaker block, like I said, there will be a break above before we see the shift of market structure. All right. So this region is your breaker block. So you want to sell from that. You want to sell from this region. All right, so that's a block, and also we can also say this is the block. So price traded into the region. Another region from there, uh, all the way down, all the way down. I get what I'm saying. Just touching the first one. Okay, you guys can hear me clearly. I don't know. Can you guys hear me? All right. So as I was saying, I said mitigation block. So we want to look for more. So for example, we saw this constant push to the downside, lower low, lower high, lower low. Then suddenly we saw this shit up, right? So this is a mitigation block, a recap block, because there was a sweep to the downside before this push. There was a sweep to the downside before that push. So price came into that recap block and pushed all the way up. what's going to happen in V751S. Okay, let me see. Can you guys see my screen? All right, so this is a clear example of a breaker block that made this price to even come all the way down here, because price came into that breaker block and sold. And see this block here, that's buy candle. That was why price moved all the way down. That's a breaker block. All right, so currently, market will definitely trade into external range liquidity, which are those that relatively equal low there. So that's the overall look for this pair. But we don't want to rush into. Let me just say, okay, let me see the 1 hour. I just want to do this. Let me see the 1 hour first before I will know if. Okay, looking at structure wise, um, so you can see we have been bearish. Price traded into this objective, right? That's that old relatively equalized there. And what happened? We saw this massive push to the downside, and we see that price is rising from the other block, and now we have a mitigation block. So we have a mitigation block around here. We have a mitigation block around there, and now this is the other block, and we also have a fair value gap attached to it. So seeing that, okay, definitely price might come to this, wait for a confirmation coming into that place, and now we target this old low first as our first target. um that's price coming into this region, giving us a change of character before we set to this point on our overall outlook here, right? This class is not an outlook class though, but I think I've answered the question. Can you guys hear me? Can you guys see what I just did? Did you see what I just did? um uh, all right, so that's that for. I think we have touched. um let me okay, let me delete this. Let me go to the daily. Let me show you more of mitigation blocks and breaker blocks, right? So this is another one, although it's not clear. You can see failure swing, price came into the region of the mitigation block, came up, continued the trend and all that. So that's that. I'm just showing you examples of mitigation blocks, breaker blocks. So we saw this one, a clear one. This one was very clear. We saw the sweep to the upside after markets formed series of higher high, higher low, higher high, higher low. We saw the shift in market structure bearish, right? Then price came into that mitigation block and traded down. And price traded down. Oh, you're welcome. You're welcome. So price traded down. So these things happen in the market, but you just have to train your eye to see them. Just like um, um, so the for the fair value gap, I'll not touch that one. For the fair value gap, um, and also some secrets that are attached you trading mitigation block, breaker blocks. I won't go into details. If you want to understand that, how to trade using your mitigation block, the secrets of trading, you can take our mentorship. The videos are there. You watch them, you understand them. It's very easy. All right. So the next one I'll talk about is the order blocks, right? So let's go. So what is an order block? So another block is the last for a bullish order block. We have two types of order block. We have bullish order block, bearish order block. So for the bullish order block, we have is the last set candle before the break of structure. So before this break of structure to this upside, there's another block. And like we said, other blocks are not different from demand and supply. Other blocks are not different from demands, but the difference between other blocks and can you guys hear me? All right. The difference between other blocks and demand and supply is that the difference is the candles. We use candle, like we don't mind any candle. We use any candles for demand and supply, but for other block, for a bullish order block after the break of structure, the last set candle before this push up is where we will be buying from. And I said those are internal range liquidity. So price will definitely trade into those um, regions and buy from there. I don't know if you get that. I don't know if you get that. Price will trade into these regions and buy from those regions. So for a bearish mitigation block, well, after a break of structure, price will trade into the last buy candle before the push up, before the push down, the last buy candle before this push down, and will sell from that place into external range liquidity. So you know where we'll be selling or buying into external range. External range. External range. Old lows, old highs. Right? So we said for a bearish mitigation block is the last buy candle before the push down, before the break of structure, and for a bullish order block, we said the last sell candle, which is the last bearish candle. Last bearish candle before the push up. So let's go to our chart to show you some. Let me show you some examples. Some examples right here. Let me just take that out. Let me go to V75. Hope you guys can hear me. Okay, all right. Hope you guys can hear me. All right, so let me show you an example of a bullish order block, right? I could remember this year. Yeah, this was 2021. I remember this trade very well. So you see, the market was forming lower low, lower highs, lower low, lower highs. Then we saw this break of structure to the upside. Also, there are secrets for trading, for taking other blocks. Well, I won't go into details. But you see, the last second, we have one there, and we have another one here. So, which one will you take? Which one will you take? Can you guys hear me? So the question is, which one are you going to trade? Which one are you going to take? Because we can clearly see that the last buy candle, the last sell candle before this break of structure to the up was this and this. So which one? And this one is the last before the break of structure. So how are you going to be sure that you are going to take this? the last one, because this is the most valid one. So there are also secrets for trading, for knowing the one to take, for knowing the one to not take. All right, for knowing the ones to take and for knowing the ones to not take. Right. So, but in this video I'm just showing you how to take order blocks. Right. Also, let's see another example. Order blocks are very powerful. You can see, you see why I said in the order of importance, order blocks is the least. You can see price did not even trade into the order block. Price traded into the fair value gap or the mitigation block, and this was it. Price did not even trade, or I think price still traded into the order block. This is the order block. Okay, it did not get to the order block. This last sell candle that caused that push up was the other block. Where will price trade into? Where will price trade into? Hold eyes as our target. But price did not trade into the other block. Price traded into the breaker block. So, like I said, in the order of importance, you need to take note. In the order of importance, we have we have mitigation block, breaker block before you have your fair value gap, before you have your other blocks. You see, so you should know when to how to trade that. Okay. Also, let me show you another example. Price did not even get to the other block. This was the other block. The last bearish candle before the break to the downside. Before the break to the downside, price just traded into the mitigation block. That last that second candle was our mitigation block, and price traded through. You'll be waiting for other blocks, but price traded into the mitigation block. You can see this clear one here. After this break of structure to the down, last buy candle before the break of structure, bearish order block. Price traded into the other block and sold. Can you guys see that? Can you guys see what I'm saying? Can you guys hear me? Can you guys hear me? I want to be sure that you guys are following. I want to be sure that you guys are following. I want to be sure that you guys are following. So, like I said, the last for a bearish order block, the last buy candle. For a bullish order block, the last sell candle. We saw this. This is another example where we price trade into relatively equal lows. See how price traded into that objective, and yeah. So let's go. Let's go. Let's go. Let's go. Let me show you more examples. Mitigation. Okay, this is a clear one. This is a clear one. So after this break of structure to the upside, where was the last sell candle before this push? Was this candle, and price traded into that candle and pushed up. Can you see that? So other blocks, mitigation blocks, other blocks are very powerful. Are very powerful. You can also trade them in the 1 hour time frame. After doing this on your daily time frame, knowing because daily time frame is where we tell the direction of the market. Daily time frame is where we we show where the market is going on into, right? The direction of the market, because the higher time frames are the main drivers of the market, right? So we do this on a higher time frame. If you are still saying that, oh, maybe this thing does not work for currency, let me go to, it works in any market. Let's go to GBPSD so that we'll see something. uh, GBPSD, let me show you guys other blocks. Other blocks. All right. Okay, I don't want to shake this, right? So I'll just load this to open um, currency. So yeah, this is it. So I just want to show you guys that it's not just on volatility that it works. All right. So if you even look at this, these are our first example. We saw this break of structure to the upside um, after this was the first break to the up, the second break. If you look where was price reacting from, other blocks, the last set candle before that push up was where price came into and bought from. See where price came into and bought from other blocks. See, some other blocks were not used because they were using bigger blocks, mitigation blocks. So these blocks were not used. They were not used. They were not used. You can see this clear one. After this break of structure, what was the um last set candle? That was it. Price traded into it, bought and traded into external range liquidity. Can you guys see what I'm saying? Can you guys see it? Are you guys learning something? Are you guys learning something? Are you guys learning? I want to be sure that you guys are learning. If you guys are learning, please comment that you are learning something. It's just also please share, like, subscribe. Please, if you haven't subscribed, please like, share, subscribe, please. All right. Are you guys getting what I'm saying? Please. I want to be sure that you guys are getting it. If you guys are getting it, please just tell me you are getting it so that I will know I'll continue from where I stopped, right? Um, Let me show you some more examples of very shorter blocks. So we have this one, this clear after this break of structure to the up. Set a buy candle. So let me show another example. So this break of structure to the down. Like we said, bearish order block at the last buy candle before the break of structure. So although we have other blocks here, but there are criteria for taking other blocks, which I will not touch on this free beginners course, right? That I'm taking. I'll just show you. If you want to learn more, if you want to know how to pick the best other block, you can message us and join our mentorship, right? All right, I'm back. I'm back. I'm back. I hope you guys can hear me. I hope you guys can hear me. I hope you guys can hear me. All right, all right, all right, all right, all right, all right. Let's go, let's go, let's go. So If you want to know how to pick the right order block, the best order block, like you can see here, why did I not go for this, right? Why did I not sell from that point? I waited, or I wait for this. There are many confluences to that, all right? All right, all right, all right, all right. So you have to, you have to follow some basic rules, some other rules that you add, and also that will help you in doing that. All right. So for example, another example we have. I just want to show you guys something. Another example. So let me show you. Price broke through this low, right? As of promises of lower low, lower high, lower low, lower high, broke structure. Where will price come into? Our other block. Price came into our other block. And where are we selling into? Internal range liquidity, old lows, old lows. Can you see that? Can you see that? Can you see that? Hope you guys are learning. Can you see that? Hope you guys are learning. Hope you guys are learning. All right, all right, all right, all right, all right, all right. So let's look at the current trend. Let's look at the current, what's happening currently. So we saw this higher high, higher low, higher high. Where will price trade into? Uh, and do that's sorry, we're back, we are back. Can you guys hear me? Please, if you can hear me, just say you can hear me. All right, so that's another block, right? That's another block that was into. That's another block. So go to your chart and practice these things, right? Go to your chart, practice these things, and that's the way. That's how you learn it, right? That's how you learn it. You have to see these things, and also I said there are others I won't touch, but let me see. All right. So I don't know if you guys have any question. If you have any question, please ask your question now. If you have any question, please ask your question. Ask your question. Ask your question. Ask your question. I'm waiting. I'm waiting. I'm waiting. If you have any question that you want to ask, maybe you don't understand one part, just ask your question now. Okay. How to look for crash 1000. This is not This is not a this is not an outlook though. This is not an outlook. Oh. This is the beginner's course. You know, this is the beginner's course. But let me see. Let me just show you. But I hope the last one we did helped you. I hope that one helped you though. Because ask questions, so not okay. All right. So what you should be doing now, a quick one, you should be buying into the zone, right? Into the our other block. But let me show you where you should buy from, because price traded into after that other block push price down, traded into what we call into the buy side liquidity, that's old lows. And what now happened, we saw that price gave us a quick sweep to the upside, right? So what are we going to wait for? Price will price was reacting from, but definitely I don't know the exact date, but I know price is coming into this region. So watch out for something like this. Um, then when price comes into here, then we short. I don't even know the boom 1000 you asked us to check. I think it's currently doing. I don't know. Let me see. Let me see. Let me see. Let me see. All right. So, but it did not get to our zone. Let me see. But we're still waiting. We're still waiting. It did not get to where we waited for it to get to. And I'm even seeing this equal lows. So price might come back to take it, and then um, taking out all this liquidity from that zone, or rather, let me see. Or rather, price will retrace into the zone, to this other block, and buy and continue. So price might not get there. Or where another zone you should be looking out for is um, this zone. So we have two zones, right? That you should look out for. But we are bullish. Like overall, we're looking at price going bullish. So I'll just keep that. Do you have any other question? Any other question? Not outlook. Not outlook. You have questions. You have questions. Outlook, no questions. So we're on this buy, although drawdown. I think price came into the other block to tap in. So let's see how this ends. So currently you can even add, you can even buy this 75. So I've been on this setup since morning. We're waiting for price to give us, because price reacted from another block, give us a change of character. So we're just risking about $2, $1, $1 on this trade, and we want to buy to the upside. Um, Any other questions on other blocks, mitigation blocks? Any other questions? I'm waiting for your questions, guys. Waiting for your question. Any question at all? Okay, okay, great. I can see you said you have no question for now. Okay. All right, all right, all right, all right. For the assignments I gave, have you done any of them? Have you done the assignments I gave? The assignments I gave. If you are buying V75 now, your stop loss will be about 205,219.08, which is about $1.85 to get about $9. That's like a one to 1 to 3, 1 to 4. Okay, the structure assignment. You've done that now. I think you've done that. Yeah, you've done that. Please, if you are new here, please like, share, subscribe. All right, share, like, please, please, please. Let's push this trade already. Though we would not even take it, we would not know. I've not checked it. The price has gotten to our region. I want to buy from our objective. So let me show you more examples. Let me show you guys more examples of these things. Of breaker block, mitigation block. You can see this. This is a clear one. Break of structure to the up, giving us a change of character to the upside, right? Here we price reacts from internal range, liquidity, other blocks, fair value gaps, and price reacted from that other block, push up to external range liquidity, old eyes, equal eyes, and all that. So that's what. You can see this. You can see this. We had this break to the upside, this break of structure to the upside. Yes, price reacting from other block. So you wait for price to come into the other block, and we bought. Where will you be targeting? If you don't know where to target, you can adjust. Hold eyes, and all that. Please, if you have any other question, if you have any other question, let's call it a day. At least we have touched a lot, touched a lot. All right, all right. If you have any other question, please just ask now. All right. So let me show you another example before we go. We saw the break of structure to the down. We saw that break of structure to the down. Where's the other block? Like I said, you have to learn how know which one to choose. We have that one. That even made price to okay, price did not react from it. We have 1, 2, so waited for that one, sold, and yeah, you see our price fell all the way down, taking out internal range, external range liquidity. So these are where we'll be targeting. You see our price touched, take out those regions. You see, so like I said we have liquidity. Liquidity is money in the market. That's where you see your external range liquidity, internal range liquidity. We have for external range liquidity, you have old highs, old lows, equal lows, relatively equal highs, and all that. Then for the internal range, we have liquidity void, other blocks, fair value gap. All right, and I talked about um, other blocks, right? Also, we still have liquidity void, fair value gaps, and all, but we'll not touch that. If you want to learn more about these things, you can join our mentorship. Here, you get these videos and you understand them, right? So, but for now, we just if you can even stick with other blocks, but other blocks combined with your mitigation block, which are block, breaker block, which are the major um, institutional reference point, right? You will be profitable because definitely you will make money from the market because other blocks and mitigation blocks they still work but there are confluences to trade them, right? There are confluences, there are things to trade. There are before you trade them you must have other confluences backing your setup or your trade. So I call this V75 signal. Let's see how it goes. Risk management, apply risk management. Don't go and trade. Don't go and load it, or just risking one to get nine, $1, 1 point something dollar to get about $9. Buying from this other block. Stop loss just below here. Stop loss just below here, and we're targeting. Just target this. That's 1 to 7, 1 to 7, 1 to 7 risks to reward. 1 to 7 risks to reward. So you can take that. You can take that. You can take that. I entered first because of the fair value gap and the mitigation block, but it chose to come into the other block. So I'll still stick to my direction. I will not say the market is retracing or is changing direction. I'll still stick to where I first see that price is going into. But all I'll just do is just to wait for price to do its thing, do whatever it wants to do. Price hit our SL, we enter again. Right. So that's it for tonight. Do you have any other question? Do you have any other question? If you have any other question, please you can ask. 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 UUSD. You see UUSD bought from an order block today. Bought from another block, right? So these things works. These things works. So thank you so much for joining. I think we'll end the class here. If you have any other question, you can share your, you can drop your questions on the group, right? Drop your questions on the group. Um, all right. So drop your questions on the group. Thank you so much for joining. For those of us that joined, thank you so much for joining. Thank you so much. Thank you so much. God bless you. We will see tomorrow. Thank you. Thank you. Thank you. Thank you. Thank you.